Today, we're taking a deep dive into Tilray Brands. Now, this is a company that's doing something pretty remarkable. In a cannabis market that's, let's be honest, notoriously tough, they're not just getting by, they're literally rewriting the playbook on how to win.
All right, so here's our game plan for today. We're going to start with their completely new playbook. Then we'll dig into how they've built this, well, moat around their business. Next up, we'll crunch the numbers. Does it actually work? After that, we'll talk about the massive wild card in the room, the one that could change everything. And to wrap it all up, we'll get to the investor's bottom line.
All right, first up, a new cannabis playbook. You know, to really get why Tilray's strategy is such a big deal, you first have to understand the mess they were trying to clean up.
For years, and I mean years, the cannabis sector was just a graveyard of broken promises and retail hype. You had all these companies just burning through cash, chasing this dream of federal legalization that felt like it was always just around the corner but never actually came. Well, Tilray looked at all that and said, nope, we're going to change the whole story.
And this, right here, perfectly sums up the shift. So on one side, you've got the old way, the pure play pot stock. You know the type. Its value just goes on a roller coaster ride with every single political rumor. But on the other side, that's the Tilray way, a diversified consumer packaged goods, or CPG powerhouse. They basically decided, hey, we're done waiting for politicians. They started building an actual, real business with products people buy all the time.
So, the big question is, how'd they pull it off? That leads us straight into our second section, building the CPG moat. We're going to break down the three main pillars that make up this moat. It's basically a business structure they've built to protect themselves from all the chaos in the cannabis market.
Okay, take a look at this chart. It really shows you just how radical this transformation has been. I mean, think about it. Canadian cannabis, that used to be their entire business. Now, it's just one slice of a much bigger pie. The real action, the growth engines, are in these three other, much more stable areas: craft beverages, European medical, and wellness brands.
Let's talk about pillar number 1, U.S. craft beer. This is huge. They went out and bought a bunch of major brands from Anheuser-Busch, and boom, overnight, they're the 4th largest craft brewer in the entire United States. But here's the kicker. This is not just about selling beer. It's about getting their hands on a massive, already built distribution network. The moment, and I mean the second, it's legal on a federal level, they can flip a switch and start pushing THC-infused drinks all over the country.
All right, now let's hop across the Atlantic for pillar number 2. In Europe, they're pretty much the undisputed king of medical cannabis. Their CC Pharma distribution network in Germany, it's a high-margin cash cow, and they are perfectly positioned to cash in as countries like Germany keep loosening up their laws.
And pillar number 3, that's the wellness play. This is all about their brand Manitoba Harvest, and when I say they dominate the hemp food market in North America, I'm not kidding. They control a whopping 60% of it. Think about that. It's just another rock-solid, predictable business that isn't tied to the crazy ups and downs of the recreational market. Okay, so building a moat out of beer and hemp. It all sounds great, right? But here's the million-dollar question. Are they actually making any money? That's what we're diving into in section 3, the pivot to profit. Let's look at the numbers. And here it is, the big one. In late 2025, for the very first time, Tilray reported a quarterly profit. Now you might look at that number, $1.5 million, and think, that's it? But you have to understand, in an industry that is literally famous for just burning cash, this was a seismic shift. It was the proof, it was the signal that their new model was actually working.
They also did some financial housekeeping to attract the big money investors. They did something called a reverse stock split. Now, what does that mean? They basically just bundled their existing shares together to push the price up. Why? To get themselves out of that sketchy penny stock territory and onto the radar of large, serious institutional funds.
And you have to look at their balance sheet, a debt-to-equity ratio of 0.15. For anyone who doesn't track this stuff, let me just say, that is incredibly healthy for this industry. It's a clear sign that they've been super disciplined with their money, and it gives them this rock-solid foundation to keep building from. Okay, so now that we've established they have a stable, profitable business, let's talk about the massive catalyst, the alpha that's been hiding in plain sight this whole time. I'm talking about the potential for the US government to reschedule cannabis.
So what is the 280 tax shield?
Well, believe it or not, this entire massive opportunity boils down to one small, kind of obscure part of the IRS tax code. It's called Section 280E, and for decades, it has absolutely crippled this industry.
Here's the deal. Right now, cannabis is a Schedule I drug. That's the same category as heroin. Because of that, Section 280E kicks in and says these companies can't deduct normal business expenses. Just imagine trying to run a business where you can't deduct rent or payroll or advertising from your taxes. It's insane. It creates this absolutely crushing tax burden that literally no other legal industry has to deal with.
But, and this is the magic trick, if the government simply moves cannabis from Schedule 1 down to Schedule 3, that whole 280E problem, poof, it just vanishes. It's like flipping a switch and giving the entire industry a massive overnight tax cut. All of a sudden, profits and cash flow would just explode, and they wouldn't even have to sell one more gummy or one more pre-roll to do it.
And this, my friends, is where Tilray's strategy is just brilliant. Think about their competitors, the MSOs. They are bogged down with all these super expensive farms and buildings in the US. They're asset heavy. Tilray, they're the opposite. They're asset light. The second the light turns green, they can just plug and play their THC products right into that beer distribution network we talked about. No need to build anything new.
Okay, so let's put it all together. Time for our final section, the investor's bottom line. We've got a stable business on one hand and a huge potential catalyst on the other. So, what are the risks and what are the rewards? Let's break it down.
So here's the snapshot for 2026, kind of a pro-con list. The big upside catalysts? Well, number one with a bullet is getting U.S. rescheduling finalized. Continued strong earnings or any expansion of U.S. medical programs would be fantastic too. Now the risks. The big one is, of course, regulatory delays, politicians dragging their feet. You've also got to watch for price wars in the crowded Canadian market and, the risk of a general slowdown in consumer spending.
When you boil it all down, though, the entire investment thesis can be summed up by this one powerful idea. You're not just buying a cannabis stock. You're buying a profitable beer and wellness company with a free call option on U.S. cannabis legalization. Think about that. The core business is already solid and making money. The massive upside from the U.S. market? That's almost like a free bonus.
And that really leaves us with one final big question. In an industry that is just littered with flameouts and failures, has Tilray finally cracked the code? Have they created the only truly sustainable long-term playbook for success in cannabis? And maybe more importantly, is this the model that everyone else is eventually going to have to copy?